You can grow your money over time by participating in business through investments. However, this option requires more than just words to put into practice, and today we're going to tell you everything you need to know about investing using the knowledge of Master Warren Buffett. As a bonus for you, we'll also tell you about the top 5 investments you should focus on until 2025. Let's dive into the world of finance. Buffett is highly respected and is considered one of the greatest and wealthiest investors of all time. Many investors have been inspired by his philosophy of both long and short-term investing, as well as his focus on the intrinsic value of companies. Buffett teaches us that the best short-term investments are those that offer high potential returns in a relatively short period, usually less than a year. Investing is a way to do business and generate income, but it's actually a way to achieve your dreams, goals, and financial freedom. If you desire financial independence, you should keep in mind that saving is just the first step. Investments can generate profits, but you need to understand their functions, their tools, and how to manage risk. Financial life includes risks. There are no risk-free investments because interest and profits are linked to the uncertainty present in them. If you're unsure where to invest your money without risk, keep in mind that it's not just about how to invest your money. The goal is to seek investments that make your operations more efficient, have the best returns, and that you're comfortable with the risk being managed. Your choice will depend on your preferences, as there are many options. You can invest in currencies or stocks. If you're into innovation, you may find benefits in investing in technology. If you know about the real estate sector, then you can invest in land or properties. Or maybe you feel more comfortable putting your money into investment funds. It all depends on your goals over time and your profile to start in the world of investments. Now let's tell you about the 5 investments recommended by Warren Buffett for you to invest in until 2025. 1. State bonds. State bonds are a form of fixed income investment in which the investor lends money to the government in exchange for a fixed return over a specified period of time. These bonds are considered safe investments due to government backing and low risk of default. Additionally, they offer a stable source of income by paying fixed interest during the bond's term. An additional advantage of state bonds is that they can serve as an effective way to diversify an investment portfolio. For example, if an investor primarily holds stocks and wants to reduce the overall risk of their portfolio, they can include state bonds as a way to protect their capital and obtain a reliable source of income. Another important point is that state bonds can be acquired through financial institutions such as banks and brokerages, making access easier for interested investors. Their liquidity in the secondary market allows investors to buy and sell these bonds easily, offering flexibility in their investment strategies. However, it's important to note that state bonds are subject to fluctuations in the interest market and may experience price variations in the secondary market. Therefore, you should carefully assess your financial goals and risk tolerance before investing in state bonds and, if necessary, seek guidance from professional advice. 2. Company stocks. They represent partial ownership of a company. By purchasing a stock, you become a shareholder of the company and are entitled to a portion of its profits. While company stocks can be a good long-term investment option, they can also be a good short-term option. The value of stocks can increase or decrease, and if you sell your stocks for less than what you bought them for, you may lose money. The main advantage of investing in stocks is the possibility of accessing the profits generated by the company proportionally to the invested resources. However, it's important to recognize that investing in stocks also involves risks, such as the risk of capital loss and stock market volatility. Therefore, before investing in company stocks, it's crucial to research and understand the associated risks. Additionally, it's advisable to diversify your investment portfolio by investing in more than one company and even including different types of assets to reduce the overall risk of your investment portfolio. Warren Buffett always emphasizes that it's important to remember that there's no investment without risk, and it's always important to consider the time horizon and the level of risk you're willing to take before investing. 3. Fixed-term bank deposits. They offer a fixed return over a specified period, usually between 1 and 5 years. Interest is calculated on the initial capital and paid at the maturity of the term. Fixed-term bank deposits are a common form of fixed income investment, where the investor deposits a sum of money with a financial institution for a specific period in exchange for a fixed interest rate. These deposits usually have terms ranging from a few months to several years, with longer terms typically offering higher interest rates. One of the main advantages of fixed-term bank deposits is security. The invested capital is guaranteed by the Credit Guarantee Fund, FGC, in many countries, up to a certain limit, providing an additional layer of protection for investors. Additionally, these investments are considered low risk as they offer a known rate of return at the time of investment. Another advantage is simplicity and ease of access. Opening a fixed-term deposit is typically a straightforward process and doesn't require specialized investment knowledge. Additionally, returns are predictable, which can be useful for investors seeking stability and security in their investments. However, it's important to be aware that fixed-term bank deposits have some limitations. For example, the money is locked in during the deposit period and cannot be accessed until maturity without incurring penalties. Additionally, the interest rates offered may not keep pace with inflation, meaning the purchasing power of the invested money may decrease over time. Before choosing to invest in fixed-term bank deposits, it's advisable to compare the interest rates offered by different financial institutions, consider your own financial situation and investment goals, and assess whether this option aligns with your needs and risk tolerance. 4. Treasury bills. These are a form of government debt issued by the state. They are fixed income securities with a maturity period of less than 1 year. They are issued through an auction and their value is determined by demand. Due to state protection, they are considered a reliable investment instrument. Additionally, they offer a higher return than other short-term investment options. They can be acquired through financial institutions such as banks and savings banks. If you're looking for a profitable and secure short-term investment option, Treasury bills can be an excellent choice for you. 5. Money market investment funds. These are a type of investment fund that invests in money market instruments such as Treasury bills, commercial paper, and bank deposits. Although these funds generally have low risk and returns, they offer high liquidity, meaning they can be easily converted into cash. They are a good option for investors looking for a safe place to park their money in the short term and don't have the time or knowledge to invest on their own. We'd like to hear your opinion on today's video. Do you already invest in any of these options? Leave your comment below. If you enjoyed our video, give it a like and share it with your friends. We also invite you to subscribe to the channel and activate the notification bell. Thank you for watching until the end. We'll see you in the next video.